After a run of 14 consecutive interest rate hikes in 20 months, the Bank of England's efforts to rein in inflation seem to have paid off. On Thursday, the bank announced that it was pausing its hiking cycle after the United Kingdom's inflation came in significantly lower than expected in August.
The path to lowering inflation is never easy because it doesn't happen in a straight line. But if you look at the overall picture since it peaked last autumn, it is now down 40%. And that says the plan is working. But even at 6.7%, that is a lot of pain for ordinary families who are seeing their shopping bills go up, their fuel prices go up. And that is why it is essential that we continue to stick to that plan, deliver the Prime Minister's pledge and the Bank of England's target, get it right down to 2%.
The Consumer Price Index was at its lowest since February 2022, confounding forecasts for an increase to a 15-year high of 5.5%. This also comes as good news for British Prime Minister Rishi Sunak, who has promised to halve inflation this year. However, the Bank of England is still expected to face some challenges ahead.
The bank is still in a very precarious position. We are still talking about inflation, which over the year, the OECD estimates will be the highest of any G7 country. So still pressure on the bank to really continue to clamp down hard on it.
The BOE's decision came just a day after the US Federal Reserve also held rates steady, and at a time when other central banks around the world scramble to tame surging inflation. Rahul Radhakrishnan, TRT World.
Right, let's get more on this from Naeem Aslam. He is Chief Investment Officer at Zay Capital Markets, and he joins us now from Dubai. Naeem, pleasure having you on the show. Recent UK macro data showed a mixed picture there somehow, because on the one hand, we saw rebounding retail sales, but on the other hand, we see PMIs still well below the 50 mark. What do you think of this contrasting picture? What is it telling us?
Thanks for having me. As always, look, when we talk about UK's economy and the picture, I think the best example would be a girl coming out of her bed after a massive night out, makeup all over the place and hair all over the place, because that is how I see the UK's economy still in terms of where we are today. Now, you look, the reality on the ground is that consumers are so sensitive to their spending that they think about spending every single pound. We are looking at a situation where buying cheese in the supermarket has become luxury because of the ill monetary policy put in place by central bank. The interest rates are only moving in one direction, and to a large surprise, Bank of England has been pushed in a situation now where they have literally very little room left, if there is, for maneuverability. Because if they would have increased the interest rate, let's say this particular week, it would have amplified the ongoing crisis which are already seen. For example, I am in Dubai, and everywhere I go, I see construction taking place at a level that I have not seen pre-Dubai becoming Dubai time.
Right.
When we go to the UK, you hardly see cranes and constructions taking place. Construction finance is above 12%. A home loan, just a normal mortgage, sitting at 7%, and cost of living crisis is at its peak level. Politicians do not have their act together in order to bring the economy back on its footing. It's a long road ahead, which is full of pain for the UK's economy.
Naeem, it's really interesting what you say, and despite the very evocative picture that you just gave us, I mean, we had a positive surprise on the inflation front with a higher than expected drop in the recent print. Do you see it as a temporary blip, or are we really on a solid disinflationary path at this point on the inflation front? And what do you think the next BOE move will be after a pause this week?
Well, look, when it comes to the inflation figure, if you wanted to get a better picture, you look at what's happening in the United States, right? The inflation two readings have changed their directions. And then we just need a confirmation for the third. The main reason for inflation, and I'm very pessimistic, is where oil prices are. Inflation in the UK has remained anchored in place for a long period of time. And if anyone tells you they've got a clue where inflation number is moving, they're not telling the right analysis or the right analogies. Because inflation data is the most lagging number, and it takes ages for that number to really show the actual reality. Yes, this particular week, we have seen a downside surprise. That doesn't really mean inflation is not going to take a wrong turn. We have seen the evidence of that in the United States. We've seen the evidence of that taking place in Europe as well. The UK is facing a lot of self-inflicting injuries. And I can be here with you for all day talking about them. Mm-hmm. But I think by just looking at inflation data, which came out this particular week, and then going out and then popping up champagne or celebrating that yes, inflation is actually on the right path. In fact, we are still miles away from Bank of England's actual target. We should have gone to that particular level a long time ago, given where interest rates are. I mean, what was the all-time high in the pre-financial crisis? About 5.69. And then we are already struggling that. And then this is the only reason what we think that the Bank of England didn't increase it, because the room for maneuverability is very limited.
All right. When you were talking about that construction, there's constructions going on in Dubai as opposed to what's actually happening in the UK. That's interesting because we know that the UK has a productivity problem. Now, how is the government going to tackle this, in your opinion?
You need to bring the consumer discretionary income to a level where they feel comfortable in terms of spending. You need to bring mortgages to a level where there is an affordability. Pushing mortgages from 1.5% where they were, and we've been used to that for the last decade, to 6% and 7% is not a solution for a housing market. Not to mention what is happening in the commercial real estate market, which is under immense pressure because the yields are evaporating just like that now. I mean, like the PE funds are under immense pressure from that particular perspective. So we've got to bring this interest rate to a more sustainable level. At the same time, need to not have a geopolitical tensions flaring up. This is not the time to flare up tensions. Look at Turkey. What happened after elections in Turkey? Erdogan thought, okay, you know what? It's time to do patch-up. Let's do patch-up with the UAE. Let's do patch-up with the Saudi Arabia. Let's do patch-up with the rest of the world. Let's bring the Western allies. The relationships are on the mend. They're improving. You see more positivity from that particular front. And then that is going to help Turkey a lot more than previous stance the government had. In the UK, we are still trying to anchor and flaring up those tensions with the second biggest economy of the world, China.